Stay with us till the end of this episode and find out how to subscribe to Microfinance Podcast by email. This episode is produced by MicroSave together with ShoreBank Exchange.
I found through hard experience, through not doing this, that it's important at the end of a credit analysis to ask ourselves which of the assumptions the applicant has made is most questionable. And by that I mean unduly optimistic. Which one is it? Or are there two? If there are 5 or 6 or 7 assumptions that the applicant has made that are questionable and unrealistic, perhaps you should not approve that loan. And then the hard part. I pose it as a challenge to you. Ask yourself which of your assumptions about this situation is most questionable. What have you assumed that you should perhaps not have assumed to this extent? It may be something about the math, the gross margin, the contract employee expenses, It may be something about the market, but it may be something about management. Just because your applicant went to an Ivy League university in the States does not necessarily mean that he or she will be a good business person. One of the richest men in the world at the time of his death, Sam Walton, the American who invented Walmart, never even finished high school. We have to be able to understand markets. We have to be amateur psychologists and understand management. We have to be very organized in our thinking and in our procedures so that we get our collateral requirements so that the bank won't suffer if we have to liquidate a loan. Are we equally good and excellent at everything? I don't think so. I don't think so. So in our hearts, we don't have to tell anybody this necessarily, but we should find out what we are not so good at and take that into account. At some point, almost every small and medium-sized enterprise in the world has lost money. Yes, absolutely. Those businesses that have been in business for 20 or 30 years have lost money for a year, maybe 2, at some point. Just remember that. And when you see an applicant with a good track record, that certainly counts for something, but is something going on in the business that may cause them to have a loss year. Beware the applicant whose every response is, sales will take care of it. This is a person who is probably a good saleswoman by nature, and that's very important to be able to generate sales. But more sales by themselves will not guarantee success. It's necessary to quantify whether the sales will be profitable, and additional sales are not always uniformly profitable. Beware of over-identifying personally with the applicant. How many times have you been well disposed to someone when you meet them, when they're interviewing for a loan, because actually they remind you of yourself? How many times have you been ill-disposed to an applicant because they remind you either of things you may lack in yourself or of a personality you don't like? I don't like aggressive salespeople. They have always bothered me since I've been a little child. But I learned not to judge them too harshly when I met them, if they were looking for a loan, and to imagine that their salesmanship and that drive and that pushiness and maybe even that arrogance could be a good thing if properly challenged. Too many lenders, in my opinion, hide in the numbers. The numbers they're quantifiable. They're not psychology like figuring out management. They don't call for being a fortune teller like projecting what the market will be like in 2 or 3 years. Numbers are numbers. They're firm. They're tangible. Well, yes, but doing the numbers by themselves will not tell the whole story, not with a small or a medium-sized company. Finally, beware of what some of us call mitigants. This is a mitigating factor to that weakness. This is a mitigating factor to that loss the year before. This is a mitigating factor to that market, which I think you should be cautious. You're probably trying to build too much of a case. Mitigating factors are good explanations. In and of themselves, though, they may not overcome all the weaknesses that you have pointed out.
That was the first part of our series of interviews with Dick Turner. As we keep moving along the lending cycle, we'll ask Dick Turner to share with us more of his practical advice. Our next episode will take place inside a credit committee. The credit committee may become a turning point for the future of a client's business. Please join us and see how the loan proposals are getting approved or rejected. Please notice that our website has some new features. Now you can subscribe to Microfinance Podcast by email. Just go to microfinancepodcast.com and enter your email into the field. And as always, you can watch the previous episodes on iTunes or on our Podango page. Thank you for staying with us and see you next week.